So overall, the budget was actually a positive for the market. It didn't really have any surprises in terms of the revenue front, since a lot of those measures had actually been announced in the past couple of months. Going forward, revenue will be expected to hit about 15% of GDP, with a large part of that incremental revenue really coming from import taxation that would come from the removal of the vehicle import ban. So overall, it was very much a growth-focused budget. We saw about 1.3 trillion allocated in terms of public investment, or what is called capital expenditure. So this includes different phases of the Central Expressway actually being built, the port access elevated highway, a couple of remaining flyovers that need to be completed, as well as road widening and maintenance and things of that sort. It also included some water supply projects, and in terms of some spending on low-income housing as well. So given how little we have actually been spending on infrastructure projects in the last couple of years and how much that has really constrained our growth, this is very much a welcome positive for the overall economy, and it will also actually help the government achieve its growth target of about 5%, which the President mentioned in his speech. So in this budget, the government also announced salary hikes for public as well as private sector wages. In terms of the public sector wages, there was a monthly increase of about 8,250 which was announced, but this is going to be actually phased out over about 3 years. So this is in order to ensure that the government can actually hit its government expenditure targets, but also make sure that there is enough money so that they can spend on development projects. So following this budget, where we'll see the primary surplus actually hitting the IMF target of about 2.3% of GDP in 2025, and since we've also seen that in 2024 we actually overachieved a lot of the targets that were laid out for us on the fiscal side, over the next month or so we would be expecting the IMF board to actually complete its review and disperse the next tranche, and that is also going to be a positive for the market overall.